Hey, what's up, my friend? So, when the camera went on, I was thinking, I guess it's live, but pretty lazy to, click reset and get it started afresh again. So this is why I just, whatever, right? Let's do this, right? So welcome to this week's market analysis, my friend. So in this week's video, this is the final video of 2017. I'm still thinking, which year I'm living in. So 2017, this is the final video because over the next couple of weeks, the market tends to be relatively quiet. So, I figured there's really not much point analyzing the market when it's not going to move too much. So, this is the final video and we will be back again in January. But that doesn't mean, I'm going to disappear, right? I'll still be updating the blog, sharing, educational trading content. So if you're not subscribed to my email list, please do so because you will always be updated to whatever's going on, okay? So with that said, right, that's out of the way. The second thing I want to share with you is that I have created a trading forum for you. And I'll share with you details on how to, sign up for an account and to join our community. It's free. And last but not least, we will begin this week's analysis, right? What else? See you there. Alrighty. So before I begin this week's video, right, I want to introduce to you Trading with Rayner Forum, right? I couldn't come up with a name, so why not just Trading with Rayner Forum? And I want you to be part of it, right? Here's the link, forum.tradingwithrayner.com. You come to this page, and we already have ongoing trading discussions, and people have setting up their trading journal and stuff like that. We have about, I think, close to 700 members already, right? And it's a great way for you to kind of follow me closely, with the weekly market analysis, because in this thread over here, I have actually created a new thread, right? This one over here, Rayner's market analysis for passion and profits. So I basically, share my analysis of the markets in this thread on top of the weekly video. So you can see that I share, charts, right? Charts. And as well as the weekly video. This is last week's video I posted here, the Bitcoin one, and then I kind of follow up, to see that if there's anything else that's interesting, I'll continue to post, I'll reply questions, and I'll help you, along the way. So this is basically, I would say, an add-on to the weekly video that you're watching over here, and it's all happening in this forum. If you don't like my style of trading, you don't like Rayner, no worries, right? You have, people who have trading discussion that you can drop in and, share your inputs, right? Like, for example, so traders, what do you trade? I trade wheat, corn, I trade FX, backtesting method. Which is your favorite time frame? Which is your favorite indicator? Okay, which is your favorite trader? Rayner is my favorite trader. Along that line. So it's pretty lively. What else? You have people talking about trading strategies. Woohoo! Right, scalping the news, moving average, stuff like that. And yeah, really, right? It's a relatively new forum, so I highly suggest you quickly come down and chop and get your username, right? Because since it's new, chances are you can get a username that you want. For example, I got mine Rayner because I own this forum, right? But say for example, you don't have a username like Rayner123 because someone else took the name Rayner, or Mike123, Mike87, stuff like that. So come in early, get your username, chop it, right? And it's yours forever. Okay, so yep, that's the news that I want to bring out to you. So on top of the weekly market analysis, this forum is a place where you can connect with like-minded traders and to follow up whatever they have been sharing in the weekly videos. Okay, let's move on. So with that said, right, first thing first, I want to be talking about... Sorry, I had too much coffee, so I may sound a little chirpy than usual. So okay, go. So let's look at the big picture, right? So a couple of weeks back, I mentioned that gold is pretty much in a range, right? If you look at it, right, the volatility seems to have, shrank in this portion over here. And then I said, right, if, whichever direction that the market breaks out, whether it breaks out higher or breaks out lower, I don't want to fade the breakout. This means I don't want to trade against the direction of the breakout. I want to trade in the direction of the breakout. And now clearly the market has broke down lower. So I want to trade in the direction of the breakout, which means towards the short side. Okay, so that's the concept. So now notice that this market has retest, right? Previous support now turn resistance over here. And when I go down to the 4-hour time frame, here's what I see. I see that the market has, come into this area of resistance, got rejected once, came in a second time, got rejected once again, and right now it's trading, somewhere near these lows over here. So I'm looking to short this market, all right? I don't want to short at this over here. I'm trying to get a better price. So I'm having a sell limit order Okay, mind you, this is not a trade call recommendation whatsoever. Please do your own due diligence. I'm just sharing this with you as educational purposes. Okay, so I'm placing a sell limit order somewhere here, right? Hopefully to get filled at a better price and have my stop loss, right? 1 ATR above this high. I'm referencing my stop loss, right, using the daily time frame, right? So I have more buffer. Okay, so just to share with you an example. Okay, the daily time frame, you pull out the ATR indicator. Okay, there it is. I typically like to use a 20 period since there is 20 trading days in a month. I use SMA, but it really is not going to make much of a difference, right? One of the most common questions that I'm going to get from traders is, Rayner, which is the best ATR? Rayner, which is the best moving average? Hey, Rayner, which period is the best RSI? Hey, Rayner, which stochastic time period should I use? And the answer is, it doesn't matter, right? What matters is the concept behind it. The concept behind how you use the tool. The parameter isn't important because trust me, right? A parameter can work best on a given set of time frame. If you look back like X period of years, 5 years, 10 years. But as the market moves on, right, the parameters will change. So this is why there's no such thing as a best indicator out there, because the markets are always changing, right? For example, a 20 period moving average may be good for, let's say, the last 5 years. But if you look back at the last 10 years, the 50 period moving average could be better. And you look back at the last 20 years, the 70 period moving average could be even better. So this is why I say don't get too fixated on parameters. Understand the concept. That is what really, really matters. Alright, so understand the concept. So the concept behind this ATR, why am I using this? Right, remember the concept behind this is because I want to give my stop loss a buffer away from this high over here. I don't want the trade to come into this high, trigger my stops, and then, continue trading lower. So the concept is, how can I give myself a buffer so I don't get, stopped out too early? And the technique I use is just using the ATR indicator to tell me what is the volatility of the market and then add on above this high. So for example, let's say the ATR is say $12. What I'll do is I'll calculate the high over here and add on $12. Right? So my stop loss will be, somewhere around here. Okay, so understand the concept and not get fixated on the parameters. Right? This is a mistake that I see many traders making. Okay, so this is a trade idea on gold, and I'm looking to short this market. Another one is natural gas. I would say it's a similar setup. Okay, so you look at natural gas. Again, if you look back, this market has been in a range. Man, it's a range. So you can see that this area of resistance and support, right? No doubt we have a couple of spike above it. Okay, you can actually draw another line over here, another level if you want to. Okay, so notice that natural gas has now, broken below this area of support. Okay, so what I'm looking for is there are actually two ways to play this, both long and short. So let me explain. If you want to trade alongside, right, what I'm looking for is for a false breakdown, meaning to tell me that buyers have stepped in aggressively and pushed price higher. So what does this appear on your chart, right? It's very simple actually. It would appear in the form of a very big bullish candle, maybe an engulfing pattern, and then it closes back above this area of support. Okay, if that happens, you are going to, be trading against traders who are short this market. Traders who, short the lows over here, short the lows over here, short the lows over here. If this happens, right, traders who are short are now trapped. Right, imagine this: if you're short, right, and market spikes and close bullishly against you, aren't you, feeling the pinch? Okay, and where would you put your stop loss? My guess is you put it somewhere here, here, or maybe even here. So as the market progresses higher, it's going to trigger this cluster of stops, which will fuel further price advance. Okay, so this is the first approach, right, to long natural gas if this happens, right, a false breakdown. The second way to trade this is, number 2, is to short it, right, short. What am I looking for in a short? I'm just looking for the opposite. I don't want to see buyers stepping in and push price higher. I want to see, buyers being controlled by the sellers. I want to see the selling pressure continue. And this can appear in the form of a small bodied candle where you see the range of the candle should be pretty narrow, right? Unable to push price higher, right? So you can actually draw someone like a bearish flag. And if the market trades below this low, right, you should expect a further selling pressure and the market should, continue trading lower. So that is for a short setup. So for natural gas, you can either go long or short depending how the price action unfold itself. So this is what it means to be a price action trader. You're watching the price action of the markets, right? Finding a sensible level to go short, have a valid level to set your stop loss, right? And just, manage your trade accordingly, depending on whether you are a swing trader or whether you're trying to, capture a longer term trend. So let me explain this more with the Palladium trade that I took. So Palladium, right? Look at this chart that you can tell it's an uptrend. Okay, if you can't tell, very simple, right? Just use a tool like the 200 period moving average. Okay, if the market is above it, then the trend is towards the upside. The longer term trend is towards the upside. So clearly, Palladium, it's in a uptrend. So the next thing I did, right, is that I had the 50 period moving average coming out. And I noticed that this market tends to bounce here once, twice, thrice, 4 times. And over here, this was the most recent bounce. And again, right, I didn't kind of, anticipate and put a buy limit order here thinking the market will bounce for sure, right? I let the market tell me that it's ready to trade higher in the form of, a bullish close over here. So I went long on the next candle open, had my stops again, 1 ATR below this low, I think somewhere here. Okay, so now, how do you manage this trade? So as I've said, it really depends on your trade management, what you're trying to accomplish from this trade. So let's talk about swing trading, number one. So swing trading, right? What is swing trading? Swing trading, you're just simply trying to capture a swing in the market. So if the market is trending, you long on a pullback and you exit just below this highs over here, capturing this portion, which is a swing. So that's why we call it swing trading. So for this one example, if you are long, say over here, right, naturally this will be a level that you can look to exit your trade over here, right, to capture one swing in the market. So on the other hand, right, you have what I call a trend following. So trend following, you typically look to capture a trend. So you're willing to, absorb all this pullbacks along the way. So needless to say, your trailing stop loss will be larger because you have to give the trade more room to breathe. So how can you, trail your stop loss on this trade? So one approach that you can use is, again, the 50 period moving average. Okay, so you can notice that the market has been supported by this 50 MA for quite a while. So if the market, closes below the 50 period moving average, you exit the trade. So that's one way you can look to trail your stop loss. So a lot of it really depends on, what, first and foremost, what are you trying to accomplish as a trader? What are your goals? Swing trading, trend following, right? Once you nail down once you understand where you're coming from, then you can apply the appropriate trading techniques to meet your goals. So often, right, I guess the biggest problem with traders is they don't even know what they want. They just, apply random techniques and strategies, trying to, figure something out along the way. But without clearly defined goals, you'll be running around in circles. Am I right? It's like, you're in a maze. If you don't have a map to get out of the maze, you'll be running around in circles in the maze. Like, like rats, right? They are forever inside, dwindling here, left, right, center, whatever. But if you have a map, you know where you're going, then you can get out of the maze quickly. And it's the same for trading. You need to have a map. You have to know where you're going before you can use the right tools to get to where you want to go. If you do not know where you're going, then naturally, you're going to be lost, confused, frustrated, and, waste a good chunk of money along the way where you could have, spent it for some December holidays and stuff like that. Okay, so I'm digressing for a little bit, but I hope you get my point. Have goals, and then find the appropriate tools and techniques to meet those goals. Okay, my friend? So with that said, right, I have come to the end of this week's market analysis, all right? So just a quick one, right? The forum, Trading with Rayner forum, is for you. Come down here right now, forum.tradingwithrayner.com. Sign up. It's a free account, absolutely free. Okay, and join the discussion. All right, the link is so obvious over here. Okay, and after which we spoke about a few things. We talked about gold. Said that I'm looking to short this market towards the downside. Then we discussed about natural gas. You can actually go long or short depending how the price action unfolds itself. Then we talk about Palladium, right? Actually, it's more of a trade management, whether you want to be a swing trader or trend follower. And last but not least, right, I said that, a couple of things along the way is that I mentioned, focus on the concept, not the parameter, because the concept is so important. Let me just circle this, okay? Concept. And then finally, I talk about, having the right goals. Oops, sorry. All right. Then I talk about having the knowing what is your goals and then having the appropriate tools and techniques, right, to meet those goals. So that is what I have covered in this week's market analysis. I hope you've enjoyed it. So with that said, right, if you have enjoyed this video, please hit the like button and the subscribe button below. And if any comment, feedback, just let me know below. Or you can always come to this thread and we can always, carry on our discussion, and keep in touch over here in this Rayner's market analysis for passion and profits. Okay, so with that said, I wish you all a fantastic year, or rather a fantastic December. And I'll talk to you soon.